So Lou, just going back to what I was talking to you about yesterday, wanted to sit down and wanted to put this one on camera on the podcast, really just because I was on a call yesterday. I had some time. I was making a drive down to meet an investor, and like I often do, I start, going through the phone and phone book or, scrolling and choosing names of, just people that I want to call that I haven't talked to in a while. And, I made a call to a realtor. I won't say his name in order to avoid embarrassing anybody, but, made a call to a realtor and we were having a conversation. And the question that I asked him was this: tell me about one of your clients and tell me the reason why that client, in your mind, why that client hasn't bought or sold with you in this market. And he continued to tell me about one of his clients that, good income, stable income, from a qualifying perspective, probably wouldn't have any issues getting maybe a couple $100,000 more in order to potentially buy a new home. And their issue was, I don't want to pay the increased cost of the mortgage for the new purchase.
Okay.
And so I said, okay, there's a lot to unpack here.
I see where you're going.
Yeah. So with that, I said, let's sit down, because there's so many different pieces as a mortgage broker, as a mortgage brokerage, that we could potentially, assist realtors with, buyers with, sellers with, that can maybe help them move along some decisions about maybe buying or selling, right?
Yep.
And so, one of the big things that comes to mind is simply porting. And, we want to talk about porting, want to tell people what porting is, just for, as a start?
Yeah, sure. Why didn't he call you?
I know,
call you sooner? Hey,
should have called me sooner. Hello.
Wants to buy. Can you talk to him? Maybe
Yeah.
See what it would look like? Anyway. Yeah. Leave the advice to the experts. Nothing against realtors. Obviously, they're partners of ours. But, mortgage stuff, please talk to an expert.
Yeah.
Because you never know.
You never know.
Yeah, porting's obviously the first thing that came to mind. I guess for the viewers, what is a port? Mm-hmm. It's a type of wine, as you know. That's where ships come in and out of, I believe. But the port that we're talking about refers to you taking a mortgage that you have currently on one property with you to a new property when you sell and buy. Mm-hmm. And of course, the main reason that people do this is penalty avoidance.
Exactly.
Right? So if you have a mortgage here, you just break it to go take a new term somewhere else, you're going to have a penalty. Mm-hmm. So that's the number one reason why they do it. Now in this market as well, there's the added benefit of probably, if you have a fixed rate that you took a few years ago, it's looking pretty darn attractive today. So why wouldn't you want to?
I'm keeping my 1.95 as long as I can, right? And that's the sentiment of most people. It's like, I was lucky enough, smart enough, educated enough to say, if they're giving you 1% money, 2% money, take it and lock it in, because it's how close do you want to get to free. So now you want to hold on to that rate. But the educated consumer understands you can keep that 1%, 2% money and get more.
Yeah, there's a lot of different ways that it can go, and different lenders have different rules with porting. But that the general sense of that is, yes, keep what you have, bring it from this property to this property, and then there's some nuance, like, do you need to increase the amount? For a lot of people, they're upsizing or buying something more expensive, growing. They need to borrow more money. So what does that look like with porting? Different lenders have different rules, but yeah, it's such an advantage if you have a great rate today compared to what's out in the market. Mm-hmm. And even though they've started to come down, if you have 2% from 3 or 4 years ago, who wouldn't want to keep that in some form, right?
Exactly.
So porting is used to be a good chunk of my business when I was at the bank, as you probably know. I'm sure it was for you. Well, maybe not for you.
No.
It was for me. And for us, it was, I don't want to say easy because nothing's easy, but it just made a lot of sense in so many cases. Not all cases, which I'm sure we'll talk about in a second, but in so many cases. And people don't know.
Yeah, people forget. It's part of the contract that it's there for you, hopefully, as long as, the mortgage contract that you signed, then it's included. But assuming that it is pretty standard, it would make sense to look and say, hey, I get that I have, I don't know, $500,000 mortgage at, 2%. And yeah, I would really like to buy that house that's, I don't know, $1.2 million. And, I can sell my semi or town or whatever at $800,000. So yeah, you're going to be taking maybe $400,000 more of mortgage if you qualify.
Of course, yeah.
Right?
You certainly have to qualify.
Yeah, but if you can sell in this market, if it's reasonable for you, you sell your home. And if you're able to buy in this market, maybe there's an advantage there. Right? How many people are actually looking to transact in this market right now? I would say probably less than there was.
For sure.
Exactly.
I think I don't know what they were, but the June numbers, I'm not a realtor. I don't have my finger on the pulse, but I sort of pay attention passively, and the numbers are down.
The number of
transactions are down
significantly. Of course. So. Yeah. So if you are in a position where you have stable income, you know that, you have the same amount of cash flow coming into your home for the foreseeable future with a good savings, emergency plan, and, things are looking the way they should.
Yeah. As good as they can be.
As they should.
Anyway,
yeah.
Right? Yeah.
Exactly. Why would you not look to transact in this market, keeping the interest rate that you have, porting that mortgage, and maybe acquiring that bigger home?
Yeah, I'm not a transact for the sake of transacting guy, but if you have the intention to do something, whether that's move your family up to a larger home, or maybe you're going the opposite direction, you're looking to downsize, reduce your debt, lifestyle change, whatever. The way I look at it now is like the mortgage shouldn't be what holds you back, and certainly not assuming, like your situation with the realtor, assuming something about your mortgage should definitely not hold you back. What does it cost you to have a conversation and find out, like, what would it look like? I have a mortgage on property A. I'm going to sell property A and I want to buy property B. What are my options? There's literally no harm to have a 15, 20-minute conversation. Let us show you what we can do, what we can come up with.
Yeah. It's part of the reasons why I often just continue to make the calls, right? And even people that are part of the network that I talk to, then some people they're new, and you try to make the connections, and maybe sometimes, I don't know, they're afraid to call. Don't be afraid to call us. We're here, right? We're here to answer questions. That's what we do.
The other side of it as well is, don't just think because you can port, it's the best thing for you. So your example there, $500,000 mortgage now, maybe you need $400,000 more. I do the math there.
Yeah.
Because you're adding a lot.
Exactly.
So for people who are wondering, like, what does that even mean? Generally, the way banks work is it's a weighted average. So if you have a lot of money at a rock bottom rate and you're only adding a little bit, well, the weighted average is not going to change the low rate that you had all that much. It's going to pull it up.
Correct.
But it's relative to the amount of new money. It's not going to pull it up a ton. But now let's flip that. Let's say you are adding a significant amount at a slightly higher rate. Now there's more weight here. So now you're porting, your final result is going to be you're going to be more impacted on the negative side rate-wise.
Correct.
Than you would be if you had a smaller amount. So now it starts to become about, well, what does that look like? I'm always a proponent of figure out what it looks like with your lender, even on renewals. I'm always like, you'd be a fool not to at least check with your
of course, it makes sense to look.
But certainly if it's a lender we deal with respect to porting, we can help take that on as well. So figure out what your port looks like. What are the benefits? So penalty avoidance. But now, what's my rate? What's my payment? Versus, well, what if I didn't port? Let's say.
Yeah.
So what happens then, right?
If I just decide to break and get a new mortgage.
I have a mortgage with Bank A and I want to go to Company B on the new house for whatever reason. What's that look like? So is it a better rate? Possibly. What's that look like for payment?
Yeah.
And then really, what am I saving or what am I losing? So if I'm paying a penalty, what's the upside?
Yes.
So let's do that. Let's dive in and see if there is an upside, right? So for me, ports used to be a good chunk of my business just with the bank that I was with before. And these are conversations. And by the way, if the client understands where you're going on that journey, I had a lot of clients where, I don't want to say I convinced them because the numbers convinced them, the math convinced them to pay the penalty and still stay with me in my bank because I can offer you a port. But actually, do you know what? It might be better for you to actually break, pay the penalty. Let me show you what it looks like in terms of savings. And that client was like, people just think, well, if the port doesn't look good, I'll go somewhere else. Like there were a lot of clients that I kept there at the bank because I offered them something that they were thinking like, oh, you can do that, but why would I pay a penalty and stay with you guys? Well,
It
we have an
actually
offer
makes
right
sense
now. Let me show you
Yeah.
how much you're actually going to save by doing it my way.
Yeah.
So, yeah, porting is one of the least understood things, I think, with clients and even like bank branches, like financial advisors, they don't understand it.
It's part of the mortgage contract that unless you really, I'm going to say, take the time to understand and understand how to work it to your advantage, it's one of the hidden gems that a lot of people miss out on, right? And in this day and age where we all should always be looking to save money, let's be real, but where things are a little bit more expensive even now, we can't forget that these types of things exist.
For
right?
sure. As a broker agent, when you're putting a mortgage with a particular lender in the first place, hopefully you've had a discussion about what do the next few years look like for you.
Well, you would hope.
Right? Because your client may end up in a situation where they buy and sell. You probably know the stat better than me. Like what's the average term? The average 5-year term? Back me up.
Yeah, you're talking about the length of time that it actually
the
runs.
average that an individual stays in a 5-year term is a little over 3 years.
Yeah, 3 and change.
So for different reasons, of course, but probably one of the main reasons is they sell and they move. Well, now if you're in a 5-year, you're paying that mortgage out after 3 years.
You're going to have a penalty.
Well, you better hope that you're able to port, hopefully, and that you've at least had that discussion at the beginning and your broker sort of looked after you, right?
Yeah. Made sure that it was the right mortgage for you.
Correct. Yeah. And sometimes it happens that life threw you a curveball.
Yeah.
I had a discussion. Clyde, what does the next few years look like for you? What's your 5-year plan? I'm not going anywhere, Lou. I'm going to die in this house. But things change,
Of
right?
course,
Like life
of
can
course.
still change.
Yeah.
So that maybe speaks to, just like with us, how we work with lenders that we sort of know and trust, and I like their policy.
Yeah.
So it's not always about rate. I work with this lender not just for the rate, but for things like this, that I know that if my client finds himself in this position, they're not stuck. It's not going to cost them on the back end, which, by the way, undid the lower rate that maybe they could have got at the beginning.
Exactly. Yeah. Because it's not about just the rate, right? It's the rate is what they get you coming in, right? But on the way out, what's going on, right?
I want to give you both.
Yeah, sure.
I want to give you the best rate with all the best features.
That is
of course,
the whole reason
right?
why
But
we should use a broker, right?
But it's lowest rate versus lowest cost. It goes back to that. But it's important that you work with someone that, number one, will take the time to understand where you want to go on this journey called life, how your housing and financing plans will be impacted by that. And then, well, based on what you sort of told me, where does it make sense for your business to go?
Hey, wise words from a wise man.
I had you speechless for a second. I was like, why is he just staring at me like that? This doesn't happen very often.
All right. Well, is there anything else we want to touch on porting before we let him go?
I mean, there's so much. Different lenders, different rules, right? So you may have heard same term blend, extend and blend. That's the difference. There's so many things. I don't think I'm going to go through it on a short little video like this, but speak to your mortgage professional. I mean, there's no two mortgages and no two ports even are created equal.
Correct.
There's even premiums, insurance premiums that you could potentially port that a lot of people don't know about, right? So when I talk about ports, I'm talking about the mortgage product itself, the term that you're in, but you can also port insurance premiums. So if I bought a house with less than 20% down, for instance, I paid a premium. Now, when I go buy a new house, if it's going to be another insured deal, meaning I'm going to put less than 20% down or I need it insured, well, perhaps I can port the premium that I paid, or a good chunk of it, so I don't get hit with another premium, at least not a full premium again.
So when you say premium, we're talking about what people call like the CMHC
premium. Insurance.
Yeah. So people are always like, oh,
default insurance.
It's the CMHC. Well,
things.
CMHC is just one of, but people always say it's the CMHC. So what Louis talking about is the CMHC right now,
I'm getting
right?
too technical with my industry speak, but yes, any one of the insurers, when you first get a mortgage and if it's required to be insured, the customer pays an insurance premium that typically gets tacked on top of the mortgage. Now, when you buy and sell, us being GTA, a lot of our clients, the second home, they put more than 20% down.
Yeah, usually.
But a couple things. So number one, you'll always have clients that don't. They bought the first house with 5% down, the next one, they own 15% down. Okay, well, you paid a premium, an insurance premium on the first home. Now, a lot of people just assume, I'm going to pay again the same rate that it's going to cost me an arm and a leg here. Well, no, you can actually get credit for some of the premium
that
you've paid already. So we can actually, we'll call it a discounted premium under the right circumstances. So you can port not just the mortgage, but the premium you've paid. And there might even be cases where you're putting more than 20% down, but it makes sense to keep the insurance coverage that you had, port the premium, even if you do put more than 20% down, which, there's a million scenarios that we're not going to cover today, but I think it just goes to show, like, if you have a mortgage and you want to buy and sell, you need to speak to a mortgage professional because there's so much there. Don't just assume you're done with this mortgage, walk into your bank and, what can I get today? Because you're leaving money on the table.
Yeah. And that's where we can help. That's where we can add value. Sure. So let's wrap that one up. I think it was a good chat, good little conversation. And at the end of the day, we're here to help. We're here to answer questions. So give us a call.